What's up, everyone? It's Karthik with MoneyVest. Welcome on board for our live stream for inflation. CPI numbers are coming out in less than 30 minutes. So CPI numbers, which are the inflation numbers for the US for the month of February, are going to be coming out in less than 30 minutes. The markets are desperately waiting for these numbers because we do have the FOMC meeting in 7 days. In exactly 1 week, we've got Jerome Powell's speech, as well as the summary of economic projections also coming out. So again, thank you so much, everyone, for joining. Really appreciate you all. And we are seeing a little bit of this rally pre-market as Tesla is pushing up over 3.5%. We've got Nvidia up over 2%. NASDAQ here pushing up almost 1%, getting a little bit of a rebound after another sell-off from yesterday. And we got S&P 500 down over 80 basis points. Yesterday here, pushing up over 79 basis points as well. Volatility here is back down in the 26-25 range. We got tapped out at 29, a little bit shy of 30 twice, 2 days in a row. We got tagged at 30 and then got rejected there. And right now we're on our way lower as the markets are starting to recover a little bit. But of course, we'll see if inflation keeps this party going or ends this party once and for all, because we've got CPI numbers, like I said, in exactly 30 minutes here, 25 minutes to be precise. And we also have a poll going on right now. If you're expecting the markets to rally or crash after CPI today. So participate in that poll. Our target would be to get up to at least 500 votes here for this poll. And so it's one of those days, CPI Wednesday, very, very important, right? Very important for the market. And this right here is going to be the CME FedWatch tool. The next FOMC meeting is in exactly 7 days, so next Wednesday. And right now, the markets have a 97% probability that we're going to see rates steady, rates exactly where they are. So 97% chance that the Federal Reserve is going to pause interest rates and not move them. 65% probability for May. They're also going to keep rates where they are. And then June is when the markets are pricing in for the first rate cut. And then September for the second rate cut. And December for the third rate cut of 2025. But again, 3 rate cuts in 2025 is only possible if there is some increased assumption or expectations for recession, which we also got the JOLTS number yesterday, came in a little bit stronger. The unemployed ratio, the JOLTS to unemployed ratio, is now sitting at 1.1 again, which is a very strong reading. This is, again, continued strength in the labor market. And so the Federal Reserve has a lack of incentive to lower interest rates as aggressively as the market's pricing in. But of course, things could change if inflation actually moves lower. So coming over to expectations and what is the consensus among Wall Street for these inflation numbers in the next 25 minutes. Core CPI month over month and headline CPI month over month. The expectations are for 0.4% on core and 0.5% on headline. Actually, 0.3%. Excuse me, I was reading off the previous numbers. Estimates are 0.3% on both sides, month over month for core and for headline. And for year over year, core inflation is expected to come down from 3.3 down to 3.2%. And for headline inflation, the big number is expected to come down below 3% to 2.9. So that is the consensus, and these are the actual numbers over the last 12 months worth of data here on CPI and, of course, core CPI. So if you scroll in a little bit, you'll notice that right now we're at 3% for all items CPI, which has been increasing from 2.4 from back in September 2024. This number has gone up from 2.4 to well over 3% now. And if it continues to accelerate even further, the worst thing for the market would be a 3.1% print on headline inflation. And then I think all hell will break loose and markets will not react positively to this increase in inflation. So 2.9% is the expectation for the numbers here. And then all items as food and energy right now sitting at around 3.3. The expectations are for us to see 3.2%. So 10 basis points lower for both headline and core on a year-over-year basis, and month-over-month, they're both core and headline expected to increase by 0.3%. So that's where we are. Participate in the poll, do me a favor, and also share this live stream with as many traders, investors, other family, friends, people who want to join, who want to know where inflation is sitting, because we're going to break down this report as soon as these numbers come out at 8:30 a.m. Eastern. So again, for February 2025 CPI data are scheduled to be released on March 12th, which is today at 8:30 a.m. Eastern. So we're going to get those numbers in exactly 21 minutes here. And before then, again, we're going to take a look at some questions. I'm going to answer some questions and go over some individual stocks as well. So welcome on board, Alex. Thank you so much for joining. Barry, if you are seeing any kind of lags in the live stream, try to refresh. It should work out fine. Simran, thank you so much for joining as well. Appreciate you. Benjamin, good morning. The real Mr. High of Music, good morning as well. Diddley, good morning. Ray, good morning to you. Let's see, is it bad I held on to Tesla puts overnight? Well, Tesla is seeing a little bit of that momentum, right? So we're back up to over 238, so 3.5% pre-market. But again, I wouldn't read too much into these pre-market jumps because they can fade into the market open, depending on where inflation sits. But we are kind of overdue for some kind of technical rebound anyway. So it was long overdue, right? So we were talking about this technical oversold conditions for a lot of individual stocks. We've been selling off for quite some time. So you got volatility trading up to over 29.30. It was only a matter of time you were going to see some kind of technical reversal in the markets. And today could be another day where we see some technology stocks rebound after being so oversold. So we'll see what happens after inflation. Ray, just curious, what does the force tell us? Good morning, people. Hey, where's my money? G-Man says AMD, we're going to take a look at as well. Thoughts on best MAGS holding ETF? Would you say VUG? There is a MAGS-specific ETF as well that I think is going to be called MAGS, which has also been selling off. As you can see that it's down quite a bit from its all-time highs, $58. It's down over 20% in a bear market. But I think it's got a pretty big expense ratio, right? So you're going to end up paying a little bit of fees to own these 7 companies where you can actually own them yourself. But VUG is more broad-based. It's a little bit more diversified in terms of ETF exposure. You're getting exposure to a lot of other stocks as well. And I do prefer VUG over VOO because it's a little bit more growth-oriented and follows the NASDAQ closely as opposed to VOO, which is S&P 500. Again, also a very good option, but it's slightly more diversified than compared to VUG. So again, when you're looking at ETF investing, when you're looking at specific ETFs and what really to invest into, definitely look into the allocations. What does the ETF actually have? And then the expense ratio for those ETFs as well, because oftentimes there's going to be a lot of overlaps. You can find something that's significantly cheaper than if it's privately managed or if there's an actual fund manager managing that ETF. So they're going to obviously charge 50 basis points, 70, 80 basis points higher than if it's like a Vanguard ETF, which has been known in the industry to be significantly cheaper. So yeah, VUG, broad-based. There is MAGS, MAGS, if you want more Mag 7 exposure. Okay, can you please go over AMD? I'll take a look at that. Kevin, welcome on board. Robinson says, miss these lives. Yes, I know. I've just been focusing on other projects as well. We've got the website, that we've been working on, and it's kind of going through a whole redesign UI phase where we're restructuring a lot of that. We're reworking all the data providers, and so a lot of my time has been taken up on those projects as well, just adding a little bit more value and quality for all the members. But we'll soon restart all these live streams again. But I'm still live on some of the more important days, such as CPI. I'll be live again next week on the Federal Reserve meeting, FOMC, so we'll cover that as well. Okay, so John says, I'm still having fun with these 2-year leap puts I bought back in December. Deltas went high on them. Took me 20 minutes to remember the narrative why we are even selling off. Yes, tariffs has been a growth scare for a lot of these companies where, a lot of the Magnificent Seven, that's where the sell-off has been concentrated in. There's been a lot of selling pressure in Magnificent Seven in technology as opposed to anything else. And so if you take a look at XLK, just the brutal selling pressure of week after week. This is 4 weeks in a row of selling pressure in technology, right? This is XLK. It's very obvious if you compare this to Staples, XLP. It's only this week that XLP's actually started selling off, right? So Staples have only started selling off this week. XLK is primarily taking on the brunt of that pain. If you compare this to, let's say, XLU, again, you'll notice 2 weeks we did see some selling pressure, but it's more or less at the same price point from a few weeks ago. If you take a look at XLE, which is energy, it's been also trading sideways for the most part, but XLK is just 4 weeks of massive amounts of selling pressure here, trading back to the same level from back in September of 2024. So definitely seeing a lot of momentum to the downside, specifically for tech, who have more exposure to China, to other parts of the world, because they're more global, right? And the more global these companies are, the more they're going to get hurt with these global trade restrictions and sanctions and all these trade wars and tariffs that we're seeing right now. And also, I think the markets are getting pretty exhausted with all this back and forth in tariffs, right? Whether there's a pause, whether there's a doubling down on these tariff numbers, whether they're kind of pausing them for a little bit. So it's just a lot of back and forth as the markets can't really, decide where to go. And so from a direction standpoint, we've just been pretty flat for the most part. And that started kind of brewing earlier in this year. So January, February, I was talking about the weakness within the S&P 500 that we were able to spot. But then, of course, the last 2 to 3 weeks have been really brutal for the market. So this week we're down about 3.4%, and from all-time highs, the index is down over 9.5%. It almost entered into a correction yesterday, being down over 10%. So it could be today where we entered into a correction if inflation doesn't do its job, if inflation comes in a little bit hotter. Okay, so what ETFs do you own in your Roth? Well, Roth is a tax advantage account, right? So you want to maximize that to the best of its ability. So, if you are looking at trading, if ever you've gotten interested into trading, Roth is the place to do it because all your capital gains, everything is going to be tax-free. Whether you want to trade options or trade, I think Roth is one of the better places to do it because you're going to be able to generate a lot of capital gains as well as premiums that you collect or dividends that you collect or short-term profits that you make is all going to be tax-free, right? So for your normal brokerage accounts, that's when I think you want to take advantage of long-term capital gains where you're buying and holding and you're not, transacting a lot, right? You're not trading back and forth because you will incur wash sales, you will incur short-term trading, capital gains tax. There's just a lot of complications with normal brokerage accounts. So, but when you look at Roth, any broad-based ETFs would be worth looking into, right? So any Vanguard specific ETFs, and there's also a lot of thematic ETFs, right? If you're specifically, let's say, bullish or optimistic on specific themes, like cybersecurity or semiconductors or renewable energy, or financials, or tech, whatever it is, you can look at sector specific or theme specific ETFs to own in your Roth as well, right? Instead of being bullish on a stock, you can be bullish on an entire sector that you feel is going to be very strong long term. So again, there's different ways to look into, and there's a product for almost everything in the market that you can find. Okay, let's see. Lives are the best, Jeremy. Thank you so much. I appreciate that, Charlie. Your lives are the best. Must be the hair. Yeah, I recently got a haircut a couple days ago, so gotta work on that as well. Let's see. John says, Mr. Moneyvest, I love selling or buying leap puts or calls. I just sell when expensive and buy when cheap. But I also hold equities. I'm oversimplifying it, but more IV equals expensive. And that's the right way to do it, Mr. Mr. Moneyvest. No one's ever said that to me before, Mr. Moneyvest. It's kind of funny, but no, that's the right way to do it, right? So you're long equities and you're short options, and that is one of the best ways to hedge your positions. It's not a full hedge, it's not a complete hedge, but it does offer a lot of flexibility to continue to hold on to your positions for the long term while also trading options on them to generate some nice premiums and again, sell high, buy low later by selling options. And that's exactly what we also do. So yes, wheeling SOXL in the tax-free account has been going great. Yes, so tax-free accounts, if you want to continue the wheel strategy with a lot of these individual stocks or ETFs, you collect all that premium tax-free and you don't have to worry about it. So that's the best thing in my opinion. Okay, inflation numbers coming out in 12 minutes. We are at 332 votes with over 500 people watching. All I'm asking is that you vote, drop a like first of all, share this live stream with other people, and definitely participate in our poll. What are you expecting after these CPI numbers to come out? Are you expecting the markets to rally more, or are you expecting this party to be over and for us to see yet another brutal day in the markets. It wouldn't be new, right? It wouldn't be new. I'm kind of numb at this point to the sell-off. After a while, it starts to feel like, it's just every day. There's nothing new. Every day I'm down like 10 grand, 20 grand. It's like, big deal. It's just another day. And you start to feel very numb. And reminds a lot about 2022. But let's take a look at the dollar index as well. Kevin's asking about DXY. It's hovering right around this support at 103, 104. And again, after the inflation numbers come out, everything's going to be moving. Dollar's going to be moving. Volatility is going to be moving. Nobody knows how to spell your name. It's Karthik. It's very simple. It's Kartik. Karthik. So, see, Abhilash just mentioned it. Karthik, what happens if you sell? If you sell, use $600 call now, will you get to keep your premium and the underlying shares? So it depends on which stock. And yes, if you're selling an out-of-the-money call, then you immediately get the credit for it. And then you get to keep your shares until that call is out of the money. The moment it gets in the money, the buyer has a right to exercise their right to buy the shares from you. So you'll have to sell. And so in that case, there's always, as option seller, you have to always remember that you have an obligation to fulfill the order. If you're selling puts, you have an obligation to buy. If you're selling calls, you have an obligation to sell. And so you have to fulfill that as a seller of options. The buyer of the option, on the other hand, has the right. They can exercise that right. They can choose not to exercise their right. It is completely upon their discretion. Of course, the contract has to be in the money for them to be able to exercise. If it's out of the money, they can't exercise. But as option seller, you have to know that you have the obligation at all times that if the contract is in the money, you have to fulfill on your obligation. So that's why it's really important to never sell naked options, because since you're obligated to buy or sell, if you're selling naked options, then you could either get a margin call or you could go short on that stock, which could make things much worse. And so that's why we only focus on covered calls or cash secured puts, where both cash and shares are acting as collateral against our options. So Mel, if you're selling calls or puts, you get the money right away. Does that get taxed, or does it get taxed when you close it for a profit? So depending on your brokerage and depending on where you're trading from, so for example, as an international trader, you have a W-8 BEN form that you got to file with a brokerage house that essentially specifies you're a non-US citizen resident, and then they don't withhold any taxes. But in a normal, regular taxable account, it's possible that they withheld taxes from the premium that you collect. So whatever premium you collect, they'll just apply the normal tax rate, which is applied to dividends or any kind of income, and then they'll withhold that as taxes, and then they'll just give you at the end of the year the report that you need to file with the IRS. So again, I'm not an expert in taxes, but definitely that's how my experience have been from trading options. And again, I've had taxes withheld, and then of course they issue a refund for that as well. Okay, anyway, so we got inflation numbers in exactly 8 minutes, everyone. We are now sitting on the polls at just over 418. 418 people have voted. And right now, 58%, majority of you guys are expecting the markets to rally more after the inflation numbers come out. For everybody joining us right now, just a quick update. CPI numbers are scheduled to come out in 8 minutes at 8:30 a.m. Eastern. The expectations for core CPI month over month at 0.3%, year over year at 3.2%. So that number is expected to come down from 3.3 down to 3.2. And headline inflation, once you include for everything, so actual CPI, month over month also expected to increase 0.3% and year over year at 2.9%. So that is also expected to come down from 3 down to 2.9%. And the markets are desperately waiting for these numbers, because this is really what's going to dictate whether we get more rate cuts, fewer rate cuts, no rate cuts. All of that is dependent on inflation, because inflation is really what the Federal Reserve watches very closely. And don't forget, we have the next FOMC meeting in 7 days. 7 days. And just to bring you up to speed, going over to the Federal Reserve website. So if you go over to meeting and calendars, this meeting is going to be accompanied with a summary of economic projections. In other words, the SEP. And that's the first SEP that we're going to get for 2025. This is the first summary of economic projection the Federal Reserve is going to give us for the year. And if you go back to 2024, We got one in December. And if I open that one up, the projection materials for 2025 in terms of inflation numbers, for PCE, they expected inflation to be at 2.5%, and for core to also increase at 2.5%. So both headline and core PCE, the Federal Reserve expected it to be at 2.5% each, with unemployment rate sitting at 4.3. So they expected unemployment to actually go up from 4.2 to 4.3%. Right now we're sitting at 4.1. We've seen a little bit of increase from 4 to 4.1%, and that it's possible that we continue to see some increase in unemployment, with GDP numbers expected at 2.1%, according to the Fed for 2025 as well. And when it comes to rates, they expected interest rates to come down to 3.9. That is 50 basis points worth of cuts. That's only 2 cuts that the Federal Reserve penciled in for 2025. And right now the market's pricing in for 3, because right now we're sitting at 4.4, exactly where the Federal Reserve ended the year, 2024. And then they're expecting 2 more rate cuts in 2025, bringing it down to 3.9. But of course, the market is overly optimistic, and they're expecting 3 rate cuts against the Federal Reserve's 2, is what they've guided for. So this is going to be interesting. We'll see what happens to eggs. We'll see what happens to energy. We'll see what happens to steak. We'll see what happens to a lot of orange juices, or oranges have been selling off. So if you come over to Orange CFD, Kevin, what's going on, man? If you come over to OJ, look at that sell-off. I mean, this was one of the best performing assets in such a long time. If you go back to the pandemic in 2020 and you simply bought orange juice, this thing went up over 490%. Almost 500% orange juice went up. But look at that sell-off in orange juice. Incredible. This is started towards the end of last year, beginning of this year, dropped 46%. So year to date, orange juice is actually down 42%. Pretty brutal sell-off here in orange juice. We've been tracking this for such a long time. But you know how it goes, right? Something goes up parabolically, it's bound to come down to something more reasonable levels, and over time it all averages out, and it's all about the valuations at the end of the day. This CPI is driving me crazy, the real high, Mr. High of Music says. Time to sell puts on eggs then, Megalev says. So John says, I've been trading since 1980s. Curious how diverse is your age in your Discord? Am I going to be the old man? No, I think we've got people trading from 1980s and 1990s. And, you know, as Charlie says, you're only as old as you feel. I'm one of the 200-year-olds collecting. That says, that's true. You just got to be young mentally, physically, and you're fine. You know, your actual age has nothing to do with how old you are at heart. You know, you could be a child at heart. I'm a baby at heart. I still get excited for my morning coffee. I still get excited for the silliest things in life. And so, and I think that's how it is, you know. Okay, we got about a couple more minutes. Hope everyone is ready. We got over 800 people watching, so make sure that you drop a like and subscribe if you haven't already. We're very close to 100,000. We're going to be doing a lot of live streams as we close in on that big milestone. You know, we're almost at 97,000. The target would be by the end of March to get up to at least over 99,000, fingers crossed. And then, of course, the 100K definitely in April. We want to achieve that target, and it's going to take collective support to get to that level from all of you, as I would really appreciate that. We, together, will get to that target, so that we can get that milestone. Yeah, pretty genius investing in orange juice, vitamin C during the pandemic. What time is the report? Coming out in about 2 minutes. 2 minutes, 8:30 a.m. Eastern. So 2 minutes is when the report comes out. So again, going off of the normal drill, we're going to reload this page. I'm going to open up the PDF, go through that PDF. I'll also break down exactly the month over month and year over year changes. And we'll come take a look at the market's reaction. The initial reaction right off the 8:30 a.m. fresh numbers. And then we'll kind of dissect the report a little bit further, take a look at month over month, year over year changes for specific items. Again, shelter makes up over 30% of inflation, so that's a very important number. Owner's equivalent rent, as well as energy. And then we'll take a look at the markets and individual stocks and how they're reacting as well. So 595 votes. Folks, we got about a minute 30 left. Definitely do participate. I'm going to end this poll now. So make sure that you put your votes in. We got about a 58% probability right now, slightly higher, that we're going to rally after the CPI report from today. I'm going to end this poll in about 10 seconds. So get your answers in, and we are ready for this inflation report. Okay, I'm going to end the poll here. 630 people participated. Again, thank you so much for participating. 58% expect that we're going to see a rally for the markets after these inflation numbers come out. I'm also going to open an incognito just in case there's any cash issues and come over to subjects and CPI. All right, so CPI for all items rises. That's the number that we're going to see right at 8:30 a.m. Eastern, and then of course come back over to the market reaction as well. Let's do this, everybody. Okay, March 12th is here. Next week, we've got the FOMC as well. This is so much better than watching sports. You can actually get to profit from cheering. I can make it into somewhat betting as well. This is like live stuff. Live. All numbers coming out live. Profit from cheering. Okay, so here we go. I'm going to reload this page very quickly and see if that PDF is already available for us for March 12th. It's loading, and let's see. Okay, there we go. So CPI increased 0.2%, a little bit less than what the expectations were. 0.2% is the month-over-month change, after rising 0.5% in January. So if you scroll down a little bit, we did come down on both accounts. So year over year, we're actually at 2.8%. 2.8. We came down from 3 down to 2.8% for year over year. And all items list food and energy core inflation is actually sitting at 3.1%, a little bit higher than I think what the expectations were. And so February month over month 0.2% for both of these inflation numbers, for both at 0.2%, a little bit better than what the expectations were. So markets here absolutely ripping, with QQQs up over 1.8% now. Got the SPY up over 1.5%. You got Nvidia back up to 113, so up over 3.9, almost 4%. And Tesla is also up over 5.6% right now. Energy was lower month over month. We've got 0.9% decline in energy commodities, 1% decline in gasoline prices. And then year over year, we are down. So still a little bit of deflation happening in energy. Shelter prices up 0.3% and 4.2% on a year over year basis. So coming over to charts very quickly and going over to the last 20 years worth of data here. So this is the decline that we just witnessed for inflation, coming from 3% down to 2.8. However, all items list food and energy came from 3.3 down to 3.1%. So when it comes to the expectations, we were looking at 3.2. We came in at 3.1 on core. Headline was expected at 2.9. We came in at 2.8. And both of them increased by 0.2%. So we were 10 basis points better on all four accounts for inflation. So month over month, year over year, core CPI and headline CPI, all four was 10 basis points or 0.1% better than what the expectations were. Primarily driven by lower than expected, I would assume, shelter prices, because that is, again, a lower print at 0.3% month over month. Energy has been declining quite a bit. New vehicle prices have gone down for the first time in the last 6 months since this is being tracked. Let's see. If you go over new vehicle sales, and we are or have been in deflation for quite some time, and we are still at negative 0.3%. Month over month came in at negative 0.1%. Energy, once again, back in deflation. It's honestly been one of the most important metrics for inflation overall, because this has really been pulling down inflation overall. And then food at home also at 1.9, close to 2%, and food prices in general have stabilized around 2.5% for food. So food doing well. Shelter prices have been moderating, and they're actually coming down to 4% now. So again, this has been a nice little disinflationary period for shelter prices from 8.2% down to 4.2. Again, this is very good numbers, but I want to be clear that this is disinflation, right? The only thing that's actually in deflation is energy prices. Energy prices are the only ones that on a year-over-year basis are actually lower than same time last year, and new vehicle prices and commodities as well. Everything else is still moving up on a year-over-year basis. So there we have it. Those are the numbers coming in very hot, very heavy, very strong actually on all accounts, and market seems to be ripping right now. Absolutely loves these numbers. Volatility getting crushed back down to under 26. Today is going to be the day where I'm selling calls. I'm selling calls on SoFi, I'm selling calls on Nvidia, and I'm selling calls on Tesla as well, and selling calls on TQQQ. So today is going to be one of those days where I am going to be capitalizing on this greenery that we're seeing after such a long time, and capitalizing on that call premiums, because call premiums are going to jump today once the market opens in about an hour. So get ready. That's why I didn't sell calls yesterday, because inflation was scheduled for today, and like a pop like this, we're going to get some very, very good premiums for these stocks. So I've got Tesla, I'm going to be selling about a call, maybe 2 calls. Nvidia, I'm going to be selling 2 calls today. SoFi, I'm going to be selling 5 calls. And TQQQ, I'm going to be selling 1 call, because I do have about 120 shares. Let's take a look. TQQQ right now is up over 4.9, almost 5%. SoFi here is up over 6.5, back up to almost $12. By the way, I also did release my shopping list. The full final updated shopping list, I was working on it all afternoon, is finally out and released for all the members. So this right here is going to be my 30 stock shopping list of high quality long-term ideas with all of my buy targets. In other words, it's got a light buy, heavy buy, and a no-brainer buy target with my fair value, as well as the PE multiple based on super conservative analysis, right? So looking at lower growth rates and lower PE multiples, where that fair value would end up if things get really worse. So it gives you a bit of an idea on what numbers, what stocks, and what prices to look out for in case things get much worse. So it's a list that you can reference and again pick ideas and do more research on your own and spend some time learning about these companies. So that is available, and I posted that in our Discord and on our platform. It's going to get updated later today. So it's going to be available under shopping list. If you go there, you're going to find 30 long-term high-quality ideas and about 7 Magnificent 7 stocks and 10 ETFs also going to be part of that. So all in all, about 45 to 50 stocks and ETFs that are going to be on that platform. Okay, Vault, hey, hi, Caddy, all green in pre-market. What's going on in summary for the late people? So people who are joining us today right now, we got inflation numbers, beats across the board on all 4 accounts. So 10 basis points better than what the expectations were for core month-over-month, core year-over-year, and headline month-over-month, headline year-over-year. We have seen a significant decline in overall inflation here. So coming from 3% down to 2.8, so 20 basis points less than where we were last month. And core is now coming down to 3.1. In fact, we have not seen 3.1 on core since, let's go back, since April 2021. So that right there is probably going to make headlines that we haven't seen core inflation as low as it is since April 2021. So it's been 4 years, 48-month low is what we just hit on core inflation at 3.1%. So I think that is definitely something the market's going to be cheering on today. And so that in itself, from a macro perspective, is a little bit of relief for the market that core inflation is indeed sitting at 3.1% now. Still above the Fed's target, but lowest levels in over 48 months is what we're seeing. So Viomi, should we sell or hold? I mean, really depends on what your strategy is. But the risk reward over the last couple of days I've mentioned has been very good. Volatility has been, tapping up to 29-30 levels. And, we've talked about this in our previous updates where it's not our job to try to predict the markets and where the bottom is going to be because it's something that nobody can really do with any success rate. But what we're trying to really understand is where the risk reward is incredibly good. So you look at the present valuations, you look at the historical valuations, and you try to understand, okay, what's the future looking like for these companies in terms of very conservative growth rates, right? So when I did that market update yesterday, there was one comment that, when you're trying to forecast revenue or earnings for these companies, it's kind of like making a prediction. Sure, you can make some estimates to what the future revenue growth might look like for a company like, let's say, Apple in this example. Without that, you can't extrapolate the fair value for today. But you can also look at historical numbers and see, okay, how well Apple's grown their revenues and earnings over the last 5 years or 7 years. And you can take that as a reference point and then go much lower to extrapolate the next 5 years. Or you can simply look at the last historical valuations and compare it to where Apple's trading today. And that is another way to look at, okay, whether stocks are trading at a discount or cheap versus expensive or really overvalued. So the shopping list that I shared today, Palantir, for example, is the most overvalued stock on that list, right? And my fair value is significantly lower, but that's okay because Palantir's already trading at a multiple well in the triple digits. It's a stock that I'm not touching right now. I'm simply holding it. I've sold calls against it. And if it comes down to my fair value, great. If it doesn't, that's also fine. I'm just holding on to it, right? So that's why fair values are not price targets, right? It's not a level where I see the stocks coming down to, but instead it's a level where, I feel comfortable and confident that given my margin of safety, given my conservative growth estimates, it's a level where I can feel confident of dollar cost averaging at, right? Or buying that stock or that company at that price point. And so for NVIDIA, that level was around 105, 106, anything under 110, seems to be very good in terms of risk reward. Same thing for SoFi. I mean, anything under, to be honest, really anything under $15, or again, the lower it gets down to, the better the risk reward becomes, and the more aggressive I think one needs to be if you are really confident in SoFi over the long term. So it's not really making a prediction, but it's really understanding the risk reward of where we are today. And can markets sell off further? Absolutely. I mean, we can certainly see, lower lows and bigger sell-offs and much worse situations for the market, but waiting on that, I feel like you're going to be waiting for a long time. So that's how we sort of go about investing, and it's kind of playing around with our cash exposure. And another comment, earlier was, Warren Buffett, doesn't predict, but he takes actions, and he's like 20 something percent, 27% in cash, and that's a huge, cash exposure. But people forget that 72% of his investments are still in U.S. equities. 72%. Like, if you are sitting 25% in cash right now, you are at the same cash exposure as Warren Buffett, right? So 70%, more than 70% of his Berkshire Hathaway's capital is still invested in American companies. So people seem to forget that if you were really sending a signal, he'd be sitting in cash completely, 100%. He'd be like, okay, I just can't trust the market now, and there's just too many lack of opportunities. Might as well ring the register, take all the profit, and sit out. But he's rebalanced a lot. He's de-risked a lot. He has increased or buffed up his cash exposure. But at the end of the day, like, still 70% is in equities, American equities. Okay, so that's going to be it for today, you guys. I really appreciate you all joining in. Again, if you want the link to our Discord shopping list, all the buy and sell alerts, portfolio updates, everything, link's going to be down below. We'd love to have you on board if you have any questions. Dude is also 94. He's about to pass on his wealth. I agree. I think that's another thing to keep in mind, is that he's getting ready for this transition to pick his, or basically pass on the firm to the next upcoming analyst and portfolio managers. But there you go. That's the link. If you want to join, get access to the shopping list. I just uploaded that today earlier. It's going to reflect on our website later today as well. But I will be selling some calls today, given how much the markets are rallying on this news here, on a very, very strong inflation print. S&P is kind of giving back some of the gains, but QQQs are still up over 1.5%. So thank you so much for joining. I will be sharing everything on our Discord later. Happy investing. Let me know if you have any questions. I'll see you all in the next live stream.